Yo, what is up, everybody? Welcome back to day number 3 of our little mini boot camp. Today, I'm going to be quickly going over how to read news and what's a trading plan that you should be sticking to, your rules, all of that. So, by the end of this video, you should be able to figure out how to use news in your trading and what specific rules you need to stick to. All right, so let's get right into it. So, you're going to be going on Forex Factory. Real quick, let me just show you how it'll look the second you pull it up. It's gonna look like this, right? You're gonna have news events all over the place because you're having news from all over the world with every single type of news. So obviously we're not gonna want that. For trading futures, you very simply put it to USD because it's the US dollar. There. If you're trading Forex, whatever your currency is, I don't know, GJ, but Great British Pound, Japanese yen, whatever you're trading. I trade futures, so we're gonna put USD. And let's just go over the different types of colors because you do see these 4 colors up here. It's gonna be gray, yellow, orange, red. Gray, never seen gray. I think gray is like to announce like bank holidays, so don't even worry about that. I guess you could have it checked on just so you don't waste your time waking up. Or not waking up. You don't waste your time hopping on the charts on a bank holiday. Yellow folder news, I personally keep this on just because I want to know when yellow folder news is. But you definitely don't have to. If you want it simply, like if you want simple, you could definitely just take this off. It's not going to have a very big impact. Orange folder news, you're definitely going to want to know what's happening with orange folder news. It could definitely impact the market a little bit, but not to the extent of red folder news. Red folder news is pays as your red folder news. Okay, I'm just going to take out all these 3 little folders. We're just going to only leave red folder news so I can show you because there are different types of red folder news that you have to be focusing on. Okay, let's go to actual day. So for example, here 8:30 unemployment claims. I do trade red folder news. Some people, if you don't trade red folder news, I don't really know how you trade because it's a volatility injector into the market. And there is 2 types of news events that I don't trade. That is going to be FOMC, which right here, FOMC, we have it right here. Don't trade FOMC unless you can prove that you're profitable and it doesn't affect your win rate. Please don't trade it. There's no benefit to trading it. I mean, you're literally, if it's at 2 p.m., which it always is at 2 p.m., New York AM is going to be horrible. It's not going to be moving. It's going to literally be just straight chop. You don't want to be trading a straight chop. That being said, if I don't know if you feel the need to trade it, go ahead and trade it. You will most likely see your win rate suffer. Um, Another one that I'm completely off of is when Powell speaks. I do not touch the charts when Powell speaks. I don't even think about trading. I go, I get my early gym session in. I do anything else besides trading. I mean, just don't do it. Some people don't trade CPI 10 a.m. It's not around here, but it's gonna be CPI at 10 a.m. Some people don't trade it. I trade it. I mean, I don't see a big impact. Obviously, if news is at like 9:57 a.m. I mean, if news is at 10 a.m. and you're about to put in a trade at 9:57, maybe hold off on the trade until news hits. It could easily wick you out and go to your take profit, or just completely stomp you out. I wouldn't do it, but if I have like a decent trade at like 9:35, 9:40, I will definitely take it before 10 a.m. news. Like I'm okay with that. Now, I absolutely love when I see 8:30 a.m. news. That means I get my data high and my data low candles. I love that. Those are very good draws on liquidity. I'll show you it in the charts in a second. But I just want to explain why I'm willing to trade these red folder news and not like FOMC or Powell. Well, FOMC is mainly because of the chop. Well, Powell, I don't want to trade Powell because Powell doesn't care about your fair value gap. I'm just putting it honest. He's gonna come out and when he goes to speak, he's gonna come out and he's gonna say something bad. Nobody's gonna care about your 15-minute fair value gap with a 5-minute IPG. No, nobody's gonna care about it. He's gonna come out and say something bad. He's just gonna dump the markets. It doesn't follow any rules, I guess you could say. The difference is though, with the other red folder news events, it's not they people say that they're unpredictable. I think it's a little misleading. It's not unpredictable. Price is gonna go where it wants to go, and all these are just they just inject the market with volatility. If you are most likely if market is most likely going to go up and a 10 a.m. PMI hits, it's probably just going to push price up quicker. If that makes sense. It's not that it's gonna change the trajectory of like your charts. That's my opinion. That's just what I've seen. Some people say that the actual between the forecast and the actual, like, it actually affects it. I just see that it kind of pushes price quicker to where it wants to go regardless. Now, what is risky if you put in a trade directly at 10 a.m., I do say that, like, I did say, like, that it's not that it's super unpredictable, but there's a very high possibility that, like, let's say you're in buys, just comes, wakes you out, and instantly rallies to your TP. Because, I mean, yeah, overall, we were still bullish, but the second that news event happened, and you just kind of see it on the charts live, it's not really something I can explain, but you just see, like, whenever it's like you just see the candle start going crazy. It can easily wake you out. I don't suggest putting a trade directly at 10 a.m., but all I'm saying is don't just completely avoid that trading day. Real quick, I'll show you a example of a data candle. We had one on the 1 minute today at 8:30. Just look for that, and then we'll get into our trading plan real quick. And that's it. Right here, there's a data high candle. I already have it marked out. This is my second time recording this video because I'm an idiot, and the first one my face cam completely blocked the whole video. Whatever. So here at 8:30, this is known as a data candle. I think today will honestly I don't remember what today was, even though I can't remember off the top of my head. Whatever. There's an 8:30 a.m. red folder data candle. That's all you have to know. Whether it's CPI, PMI, PPI, it's at 8:30. So what you're gonna see here is there's gonna be a high and a low put in during the news candle, right? Once that happens, you're gonna mark it out. Whichever one gets taken out first. So here the high gets taken out first. You could bet that the low is gonna get taken out. The low gets taken out first, and the data high gets taken out after. Obviously, it's not 100%. Nothing in trading is 100%, unfortunately, but it's like a 90% thing. It's very high probability. I love my draws on liquidity using data highs and data lows. All right. That being said, that's news. Now you know how to read news. Let's go through the trading plan. Right here. All right. First, what confluences are you going to be trading? Obviously, how are you going to have a trading plan if you don't have your entry model? What do you need to get into your trade? What are your confluences? Is it going to be higher time frame fair value gap with a liquidity sweep and an inverse fair value gap? Instead of an inverse fair value gap, are you going to be doing change in the state of delivery? Are you going to be trading support resistance? Are you going to be trading mitigation blocks, breaker blocks, whatever your little heart desires that you want to trade? Just figure out where your confluences are going to be and stick to them. Don't be out here strategy hopping. It doesn't work. I've been there. Gabe has been there. It sucks. You're just going to get frustrated. You're going to keep blaming the strategy. I promise you, it's not the strategy. It's not the strategy. It's you. So stick to one strategy, master it. I trade higher time frame fair value gap with a liquidity sweep and an inverse fair value gap. Sometimes the market is good, I'll only take the higher time frame fair value gap, or I'll only take the liquidity sweep. Just depends. If you want to be very strict on yourself, only get these three. Gabe is a very good example of someone who's very strict with their entries because he had a problem with over trading before. So now, he made it, like, I guess, harder to enter for him. That way he's not entering. It's a very good decision if you're over trading. Maybe set more rules if you're over trading. That way, the only way you get into a trade is all your check boxes got hit. Personally, I like not less confluences, but I don't need as many because I have a problem with not entering. So if I throw on too many confluences, then I'll overthink everything. Trading is very personal. It's not a one fit. Just because I do fair value gap, liquidity sweep, inverse, and just because Gabe does kind of more continuation trade, not continuation, but kind of does more like confirmation trades, does not mean you need to trade like that. Okay. Next up, what news are you going to be trading? Which are you not going to be trading? Are you going to be trading? Are you going to be crazy because you trade Powell, FOMC? I'm not going to stop you. Go ahead. You want to trade FOMC and Powell? Do it. Like, it's up to you. It's in your trading plan. I don't suggest it. If you notice that 10 a.m. CPI doesn't work for you, you journaled it and you notice it and your win rate suffers, don't trade it. It's that simple. Just because everybody else and their moms is trading it doesn't mean you have to do it. All right? It's very simple. Next one. What session will you be trading? New York AM, New York PM, London session if you're maybe in Europe, Asia session if, I don't know, like wiki price action. I don't know. I don't like I don't like Asia session. Some people make it work. Some people are very profitable in Asia session. But you know why they're profitable? Because they stuck to that session and they learned that session. And they know the ins and outs of sessions. They know everything to know about it. I I like don't be trading every single session. I've traded every single session. I've traded when I traded PL3, I've traded every 4 hour. You think I was profitable when I was doing that? No, I was not profitable when I was doing that. Stick to one session, master it. Okay. Hand in hand with your session is going to be your time frame. Because obviously, if you're trading New York Open is very New York AM is very big. Starts at technically opens at 6 a.m. and then goes all the way to 12. You're going to be trading for 6 hours a day, really? You really think that's going to work out? No. Pick a time frame. I trade market open till 11 a.m. All right, a trade that could be the most crystal clear trade at 9:29, 9:28, 9:27. I don't take it. I don't want to break my rules. Okay, maybe the trade would have hit. I know if that trade didn't hit and I broke my rules and I got stopped out, I would be feeling more emotional and I'd be very upset at myself. Set a time frame, stick to it. Don't bend the time frame. Obviously, if an entry presents itself at 10:59 and you enter at 10:59, okay, that's not breaking your rules. And just because the trade goes in like past 11, like you hit take profit at 11:20, that's not breaking your rules. You still entered at 10:59. I don't know what scenario you're ever going to be in where you enter at 10:59, but don't stick. Make your time, stick to it. How much percent are you going to be risking a day? You're going to do 1%, 2%, half percent. I don't suggest doing anything over 3%. 3% is very, very aggressive. I mean, some futures funded accounts or like some prop firm accounts are literally 3% drawdown. You're probably not going to want to do 3%. Don't do 3%. I do 1%. If you're on a live account, obviously you have 100 opportunities before you lose all your money. And if you lose 100 trades in a row, rough. If you're trading 1%, you're gonna have about 4 to 5 losses before you get wow, I'm blanking. You're gonna have 4 to 5 losses before you blow your account. Some of them are 3, if they're a little bit stricter, and you're like doing 150K. Also, how many trades a day are you gonna be taking? Is it gonna be 1 trade a day? Is it gonna be 2 trades a day? Are you gonna do 1 win and then you hop off? But then if you lose one, then if you lose like a trade, then you're able to take a second trade. And once you get 2 losses, you're out. Or once you get 1 loss, 1 win, you're out. You know, I personally do 1% a day, 1 trade a day. It's just the easiest way. I don't overtrade. It's very simple. Whether I get take profit, stop loss, or break even, I'm still locking myself out and I'm not trading. Like personally, I think if you do 2 lot, like the 2 loss, 1 win thing, like I think it's a slippery slope. If you lose one, I mean, if you lose one, then you're like, all right, I have 1 more trade, take the second loss. All right, but now I'm down a lot. So like I kind of want to like, get back to break even. It can be a slippery slope. Personally, just do 1 trade. All right. Finally, what pair are you gonna be trading? If you're trading futures, you really only have not really, but like the main ones are NQ, ES, and YM, also known as Nasdaq, S&P 500, and US 30. There's also gold. If you're trading forex, just figure out what pair you're trading. Stick to the pair. Don't be flip flopping pairs, please. You really think you're gonna be profitable on 5 different pairs? You can't even trade one. Stick to it. Write all of this out in your notebook. I want you to write this out and have this in front of you as you're trading. It's impossible. Not impossible. People would do it. But it's a lot harder to break your rules when they're lined up in front of you. Because you're going to see it. You're going through your rules. Oh, this doesn't align with my rules. I probably shouldn't take this trade. It's probably for the better. And it is for the better. Please, please, please stick to your rules. Write that out. You'll be knowing you're not going to be lost if you write out a trading plan. You're going to know what you're going to have to come in and market and do every single day. We'll go over it really quick just because it's kind of on the same topic. Journaling. Oh my God, journaling your trades. I didn't do this as a beginner. One of my biggest regrets. I really, really wish I journaled. It probably would have helped me become profitable so much quicker. I mean, it doesn't have to be a lot. You don't need a lot. Like, just put date. What day was your trade on? The size of the trade. So how much you risked, how many cons if you want to put, how many, like what size was your stop loss if you want to put. Get very specific, or you could just put the P&L that your trade was. Did you win or did you lose? Obviously, you want to journal that. Confluences, where are your confluences? If you are following your rules, your confluences and your size should not change. It should be the same thing every day. Unless you're like me and like maybe the only time it'll change for me. Oh, okay. We took out liquidity sweep. It was just a fair value gap and an inverse fair value gap on a lower time frame. That's it. But most of the time when I'm if you look at my journal, it's mostly going to be higher time frame fair value gap, liquidity sweep, IVG. All right. You're still going to want to write those confluences down because sometimes like you might notice, okay, if you want to add in an element, okay, with SMT, my win rate goes up by 20%. I don't do SMTs personally. I like look at them, but they're not like a super big thing. Write those things down. That's important to track. Same thing with your size. Your size should be the same, 1%. Okay. Maybe if markets are choppy, you want to do 0.5% and de-risk. I don't like the idea of de-risking because if I have to de-risk in the first place, then is the trade really worth doing it in the first place? That's just how I think though. Finally, your psychology. Most important thing in your journal. This should take up the longest part of your journal. These should take up like maybe max 2 lines. This should take up like 4 lines out of your journal. I mean, literally 80% of my journal is psychology. I'm gonna just put it this way: when you're not making money from trading, it is very easy to not it's very easy to not see the progress that you're making in trading because you don't have a direct number telling you how much how much you're succeeding in trading. That's not the case though. Just because you're not making money doesn't mean you're not improving. Okay. Psychology, when I started journaling, I would literally write in my journal, I entered this trade. I was this nervous. I mean, when I would enter trades, my heart would be pumping. I would feel my heart and like I would make dumb decisions because of my nerves. And I wrote it down in my journal. And now looking back on it, you could see how much progress because now when I write it, wasn't feeling nervous during this trade. I did what I was supposed to do, blah, 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 blah. Whatever you want to write for your psychology, however you're feeling. Feeling angry, feeling this, feeling that, whatever. You're going to see over time, the more you trade, the less that psychology, the less like harmful that psychology is, I guess. So now when I look back at my journal, I'm like, damn, I was so nervous during my trades. I don't feel that anymore. And that's like, you don't realize how much better your psychology is getting over time. You don't because I don't know. I don't explain. You just really don't until you see it in that journal. It's like, wow, I made a lot of progress. Please, please, please start journaling, start focusing on that psychology. It'll help you see improvements in your trading, which will help you stay more patient because we're out here looking for long-term results, not short-term get rich quick shit. Okay. That's basically it for today's video. Not really so much about trading, not so much about like confluences of trading, more about psychology and what you have to do every day to execute it. So please write this out, write it on a piece of paper, put it on your computer screen if you have to, put it on the side, have it somewhere on your wherever you're trading, have it somewhere. Please, it'll help you out so much. I can't stress it enough. But yeah, that's basically it. Thank you so much for tuning for Bootcamp day number 3. Hopefully, I'll see you for the next video. Bye.